Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 28th, 2026, and we're diving into PPG's fourth quarter and full year 2025 earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. PPG has delivered some interesting results this quarter, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. PPG reported net sales of $3.9 billion for the fourth quarter, with a 3% organic sales growth. John, what are the key drivers behind this performance?
PPG's growth was primarily driven by higher selling prices and increased sales volumes across all regions. The company also benefited from strong performance in its global architectural coatings and industrial coatings segments, which saw significant volume growth.
And how did this impact their profitability?
Despite a slight decline in adjusted EPS from 161 last year to 151 cents this quarter, PPG's profitability was supported by strategic pricing and cost management. They also repurchased $100 million worth of shares, which is a positive signal to investors.
Segment performance and strategic initiatives. PPG's segments have shown varied performance. Can you elaborate on the segment-specific results?
Sure. The global architectural coatings segment saw an 8% increase in net sales, driven by higher selling prices and favorable currency translation. Performance coatings grew by 5%, with strong results in aerospace and marine coatings. Industrial coatings also grew by 3%, benefiting from share gains and volume growth.
PPG has also been focusing on cost savings. How has that played out?
In 2025, PPG's cost-cutting measures resulted in $75 million in savings. They plan to continue these efforts with an additional $50 million expected in 2026, particularly through European manufacturing consolidation.
CEO insights and future outlook. PPG's CEO, Tim Navish, provided some insights into the company's future. What are the key takeaways from his statements?
Tim Navish highlighted the company's strong cash flow of $1.9 billion in 2025, which provides financial flexibility. Looking ahead, PPG anticipates mid-single-digit EPS growth in 2026, with organic sales growth expected to be flat to low single-digit. The focus will be on aerospace and architectural coatings, especially in Mexico.
How does the macroeconomic environment factor into their outlook?
While PPG expects challenges in Europe and global industrial markets, they remain optimistic about their technology-advantaged products and services driving growth.
EPS forecast and market reaction. Analysts had forecasted an EPS of 57, but PPG reported an adjusted EPS of 151. How has the market reacted to this?
The market reaction has been mixed. While the EPS came in below expectations, the overall financial health and strategic initiatives of PPG have kept investor sentiment relatively stable. The share price impact has been minimal, reflecting confidence in the company's long-term strategy.
What does this mean for investors?
Investors should consider the broader context of PPG's performance, including their strong cash flow and strategic focus on high-growth segments. The slight miss on EPS is offset by their robust operational execution and future growth prospects.